Hi ladies and gentlemen, this is Game of Trades, and this is going to be a trade setup on crude oil WTI futures. I'm going to do this just before, or quite a bit before the market open, um, just because I think we may get some good price action today if some of the things that I'm going to point out play out. Um, I've been looking back on the charts in crude oil, and I think this may be the top. You know, we still need some work to be done, but this could definitely be a sign of a top in crude oil. At least for now, I think um, we are going. We are preparing for a pullback to one of these levels. Um, last time I talked about uh, crude oil running into some extremely tough resistance here, the same one we ran back in early 2018, and I pointed out, something very interesting that we rallied back from 2017, mid 2017, all the way to 2018, this huge rally for 7 months. We started at the exact same point in 2017 where we started in 2019, and we are exactly at the same level, the same resistance zone, with the same type of overextended rally with little to no pullback. Actually, one thing to note is that the rally in 2017 was actually a little bit healthier. You can see here we have one healthy pullback, another healthy pullback, another healthy consolidation zone. Here, I mean, we might have one small pullback here, but nothing else along the way, which is, you know, when this happens, you tend to want to have a correction to the other side in response, a snapback rally. The steeper the trend line, the steeper the snapback rally. That's a rule that I've lived by in my technical analysis, and it has played out very well. That's what usually tends to happen. So this 66 zone, you can see here we had something very interesting on the RSI. We had two overbought levels with divergence. What does this mean? This means that here we had one high and then another high, a higher high on the price, and the RSI made a high and a lower high, all whilst being overbought. And that is very dangerous divergence. When you get two overbought levels with divergence, it is very dangerous, and um, it did play out for a nice little drop of 12%. So from all the way, if you haven't realized, I'm gonna use this as a reference point because of just how similar it is to what we're seeing now. And you can, I'm gonna show you the Fibonacci levels, Fib retracement right here. From the bottom to the top, we came back and hit the 38. Almost hit 38% Fibonacci retracement level, which is a good, healthy pullback for this kind of rally. All right, so let's see where we are now. First of all, I'd like to note that we have the exact same two overbought readings that we had on the RSI back in 2018. You can see two overbought levels on the RSI with divergence. This simply means that the momentum is way too high and we need a correction. And that is what happened here. Will it be different? Let's see. But considering the Fib retracements, you can see the 38 fib is right here, right at a perfect support level with many reactions here, here, here. So I think that if we start pulling back, if we start breaking this trend line that I noted, we will visit the 38% Fibonacci. And from high to low, from the top that we made, that would be a 14% correction. Now, is this going to happen today? Is this going to happen this week? I think there's a pretty good chance because of this RSI divergence that I didn't see last time, and now that I saw it, I think this is some pretty powerful stuff in technical analysis, and it can lead to some pretty deep corrections. Now, one thing that I'm not seeing for now is a solid break of trend line. You know, we did break the trend line, but right now we're sort of dancing on it. And on the hourly chart, I'm going to show you we're back testing actually the trend line. So nothing too major, but I'd like to see one big red candle today or tomorrow that undercuts the lows that we made yesterday or the day before. No, the day before. Back when we had this big drop, we made some lows. We snapped back up to backtest the trend line, and we need to undercut these lows to give a sell signal. And I put the pink trend, the pink price level 62.3. If we undercut 62.3, we will see more selling pressure, and we can start to look down at these levels for buying opportunities. If we start crashing through these, obviously the next one would be 42 to anything under 42 for nice divergence. But anyways, I'm not going to talk about a full crash too long. But watch these levels. Watch this pink level first, 62.3. Obviously, if we start bouncing off of it, it's going to be quite bullish because this is going to just be a huge consolidation range. And if we start popping above, then we'll have this as support for later correction. So, you know, these are all things to take in consideration. Right now, I do favor a drop to the downside, but you know, considering how bullish we've been, you know, I put the odds on very low that we continue on higher, but you know, I don't want to exclude the possibility. This is certainly possible considering we don't have divergence on the MACD just yet, and if we start making a higher high, we might just have some divergence on the MACD, which is what I was looking for from the beginning. But you know, don't think that the RSI divergence with double overbought reading isn't enough for a nice correction. It is definitely enough. And look back to 2018, what happened. So I think this is going to be a perfect buying opportunity to perhaps go long on crude in the longer term. If you guys have, you know, I know I was long on crude from the bottom. You know, we had some nice divergence on the daily chart. It was a perfect buying opportunity at support. So an easy trade to make, but I sold that here when we started getting overbought and overextended at resistance. So I'm not currently long. I actually opened a short position at 67. If you look back on my videos from here, I talked about a potential reversal right there and then, or a potential pop to 67 and then a reversal, which is so far what we're getting. You can see the MACD is starting to turn down, which is always good. And that's another thing that I wanted to mention. Don't know if I mentioned it last time, but in a correction for crude oil, if we visit, let's say, back to this 57.4 level, what I'd like to see for reversal is that the MACD goes back to the 0 line and starts curling up. Just because when the MACD is above the 0 line, it is in an uptrend, and it actually comes back and visits the 0 line very often in an uptrend to continue, continue confirming that it's still in an uptrend. And these are just part of the healthy pullbacks, healthy consolidations that you get within an uptrend. And if it starts curling over, that would be extremely bullish, especially at a resistance level. I mean a support level. So the daily chart, that's it. I'm going to show you the hourly chart too. Alright, so this is the big drop that we got. Broke the trend line. It was dancing on the trend line, broke it slightly. We popped back up, failed at this resistance zone that we created back last week. So that's another level to watch. Right now we are sandwiched between two levels, this one and this one. If we break upwards of this level, it will be bullish. If we break downwards of this level, it would be bearish. And I would favor from the top a 14% move down, and from where we are now, that would be a 9% move down. So a nice little trade here on DWT. That would be a 24% gain in DWT. So a nice little 24% trade here if you're on a 3 times inverse leveraged ETF. And that's about it, guys. So make sure to like and subscribe if you haven't already. In the meantime, good luck, and see you next time.